everybody. Thanks for tuning in today. I'm here with Mike Medlock of Flat Branch Mortgages. Mike Medlock is amazing. Say hey, Mike.
Hey. I had to unmute. I'm like 800 years old.
Oh my God, I'm pretty sure if you press the space bar, it unmutes you.
Does
okay.
it?
I think it does. So anyway, Mike may not know how to use his computer, but he is amazing with loans. So we have him here today to talk about forbearance. For those of you that don't know who I am Kathy County. I am the president and founder of the Ask Kathy Marketing Group. And we're here in Lee Summit, Missouri. That's where our hub is. And we service all of greater Kansas City. So earlier this year, COVID came, obviously, and the federal government came out and said, hey, if you have a government-based loan like FHA, VA, USDA, Freddie Mac, Fannie Mae, that kind of thing, then they were going to be able to give you forbearance. Well, that forbearance is coming due. And so we wanted to make sure that everybody understood what that meant and what kind of effects that would have for you. So we got our resident expert, awesome Mike, to come on here and talk to us and answer all of our questions. Now, the main thing I want everybody to understand is that forbearance is not forgiven. So any money that you had reduced or skipped is going to have to be paid back at some point. And we're going to talk to Mike about when that is and how that works. Anywho, that's the scoop. And so, Mike, away we go. Thank you for joining us.
Thank you for having me. It's a pleasure. It's a pleasure being here.
All right, excellent. So Mike, tell us a little bit about you. I mean, I've said you're an expert, which you would think would be plenty, but these people might want a little bit more evidence about how awesome you are. So tell us a little bit about yourself.
All right. I've been doing this in the mortgage business coming up on about close to 30 years. So I started when I was 5. This forbearance thing is a brand new thing. Forbearance itself is not, but how it's being handled during the COVID situation is. So it's been very important that we as lenders have figured out exactly how it works for homeowners and home buyers and people wanting to refinance. So we've done extensive research on it and gotten to the bottom line of how it all works, and just reached a point where we can help people. And we just need to have lead time to help them. So, but as far as what you were referencing, what to do now that if you're in forbearance and it's now coming due, we can touch on that as well.
Okay, so let's start from the beginning. Can you explain a little bit about what the CARES Act forbearance plan was and how it works? Like what is,
Sure.
Who could apply? What did you do? And then what happens now?
Right. Anybody could apply. You needed no proof of anything. You just basically contacted the servicer of your loan, whoever that might have been. We service most of our loans, but so they would have contacted Flat Branch Servicing and just tell them you are experiencing a hardship due to COVID, and you would have liked your payments in forbearance. You could request it up to 180 days at a time. When that 180 days was coming due, if you needed it again, you would request another 180 days. So you could actually go a full year basically without having to have made a mortgage payment, and it was automatically granted.
So that's going to sound pretty awesome to people who are like, hey, no mortgage for a year, but there has to be a catch. I mean, you can't get no mortgage for a year and not have a catch, right?
Well, the catch is those payments are accumulating, right? And how that impacts a mortgage is, in order to now get a new mortgage, you can no longer be in forbearance. That's when you now have to go to your servicer of your loan and work with them on how to get out of forbearance. So putting the payments on the end of the loan is one way. So all your payments get thrown onto the end of the loan, and you extend your term 6 months. Okay, that's one way. But another way is you just make those 6 payments and you're caught up. Okay. Another way would be to stretch those payments out over a year, let's say. So you take those 6 payments, divide them by 12, and you add those payments to your next 12 months. That wouldn't necessarily get you out of forbearance, would be the problem. So it's very important that you work with your lender and with your current servicer to make sure that you are no longer in forbearance. That's the
Okay.
important part.
So let me make sure I understand this right. So you have to call your, and this would only be if I wanted to refinance or move, right?
Purchase, right, correct.
Right. Okay. So I need to be out of forbearance, which means that I have to have created the solution to pay back the money, put it onto the end, or paid it back immediately, which would be a lump sum, mama jama, or I would probably still be in forbearance if I made a payment plan and was paying it back over a year. Is that what you're saying?
That would be my impression, and that's the way I've heard it. And that's when it becomes important to get with your servicer way ahead of time, especially if your plan is to move. If your plan is to refinance, we figured it out. We've just figured it out as we go. But if your plan is to move before you ever put your house on the market and get a contract on it that you're obligated to, you want to make sure what your servicer is going to deem you, to know whether or not you're going to be able to buy a new home.
Okay. So obviously if you've been in forbearance and you need to move, that's something we need to definitely find out. Because my impression would be, and this is my novice thought, was, well, if you're in forbearance, you put your house on the market, then you just owe what you owe. Right.
Well,
you have to go rent.
Sure. Part two of that is, and we've had this come up, if somebody's in forbearance, they need to sell their house and they want to buy a new house, but they can't get caught up until their house sells. They could sell their house, delay closing on the new house. Once we can verify they're no longer in forbearance on their old home, we can close on a new home for them. And that's a pretty cool way to do it.
Okay, so being in forbearance does not actually affect your credit.
It's not supposed to, but the recommendation is to continue to monitor that.
Okay. I suppose from an underwriter's perspective is, if you needed forbearance 3 months ago, why don't you need forbearance now? Right.
I think the industry knows that some people got it offered to them and took it, whether they needed it or not. I can tell you best practice is, if you can make your payment, make your payment.
Sure. Yeah, that is always the best practice, is to make your payment.
Yeah. So
as the lender who services their own loans. Note to self. So
yes, make your payment.
That's awesome. Okay. So, and I'm sure that each probably servicer handles this a little bit differently. So what would be the key questions that you would advise people to ask their servicers when they call them? And by servicers, you guys understand that maybe you went to Wells Fargo and you got your loan with Wells Fargo, but Bank of America is servicing it, or something along those lines. So whoever you're sending your payments into is what we mean by servicer. So what would be the questions we would ask our servicers so we would be very clear on what we were doing?
Well, I would start with using the right terminology, because if you go into forbearance, that's one thing. If you go into what's called a loan modification, that's a completely different thing. Okay. You don't want to modify your loan. And a lot of people would make the mistake of calling their servicer and saying, hey, I want to modify my loan. And if they go into a loan modification, now you've got an issue. Okay. You cannot qualify for a new mortgage for 12 months of making on-time payments if you're in a loan modification. It used to be that same way with forbearance until the COVID thing happened. The first few people, I guarantee you, had a hard time because they were dealing with refinances more than purchases. And so let's say a borrower is selling their house and they got a contract, and this happened to one of my clients. So he contacted his servicer, who Wells Fargo shall be renamed nameless, and just inquired about a forbearance. He just inquired. And this was early in the process, and they clicked a button and boom, he was in forbearance. We had to get him out of forbearance before he could close on that loan, because there was not any guidance yet from Fannie and Freddie on that, because it just hadn't come up where the seller was in forbearance. So it's now fine. Like I said, all they got to do is make their payments. But so first thing to answer your question, make sure you use the right terminology. Okay, forbearance, number one. Number two, what are their payment options when you go to pay it back? Because each servicer could be a little different on what they allow. It's kind of their call. And then number three would be, is this going to impact my credit? The way the law reads is what they're supposed to do is suspend any reporting activity. So if you were on time when you went into forbearance, they're not going to change the balance. Balance going to remain the same, and they're still going to report you on time for however long you're in forbearance. If in fact you were delinquent when you went into forbearance, they're still going to report you delinquent as well. So the reporting of your mortgage is not supposed to change at all. So those things are really the biggest things that you want to deal with. And then how long it's going to take you to get back out of forbearance. The bigger the company, more than likely the more red tape, and the longer it's going to take to get yourself back out so you can then purchase a new home or refinance.
So planning ahead and getting all your ducks in a row ahead of time is super, super smart. Okay, excellent. So basically, to do anything with the loan, you either have to stop the forbearance or end the forbearance so that you can move or refinance, I bet, as well. Be the same thing for refinancing. Okay.
Our credit report has to not say that you're in forbearance or payments deferred. However, different servicers report it different ways. So,
okay. So what should we know about forbearance that I haven't asked you about yet?
So when you're in forbearance, you cannot be foreclosed on. Obviously, your payments have been suspended, not forgiven. There's also part of the CARES Act. A second part of it is all foreclosures have been suspended through the end of December for now. So I'm sure after the election, that will then be dealt with again on whether that's going to be extended. And if it does get extended, I'm sure it'll be, through all of 2021. That there's a moratorium on foreclosures. So those can't happen.
So that's interesting because for the people that are out there wanting to buy a foreclosure, looking for a foreclosure, that's foreclosures have been put on the table, whether you did forbearance or not, they just can't foreclose on you.
Correct.
Oh my gosh. So that also means that for people that are wanting to buy foreclosures, there's going to be a big pop once that's released because all the banks are going to want to get those sold to get their money back. So let's say that December 2021, if it got extended, let's say, then by January, February, March, you're going to have a lot of selection of foreclosures to choose from. So that's a great time to be an investor.
Right. It usually takes if they don't extend it, foreclosures will begin happening in 2021 because there are people that even though they received their forbearance, they're still going to be in dire straits and won't be able to keep their home. So for investors, those might start popping March, April, because it takes a little while to complete a foreclosure. Right. Or short sales are an option as well, which you guys know. It's better for the borrower, by the way. Always short sales or deed in lieu are always better if they want to buy a house soon.
Right, because short sales take a little bit longer to close. Short sales can take anywhere from 3 months to a year to get through the whole process.
Right. Well, from a lending
side, go ahead.
I was going to say from a lending perspective, if somebody wants to purchase a home, if they've had a true foreclosure means you did not participate. You were adverse to them taking your home. You didn't work with them, so on and so forth. Conventional, you're 7 years out for buying a new home.
Wow.
If you participate, right, meaning you do a deed in lieu, a short sale, meaning you just say, yeah, I'm with you guys. I can't do this. Here's the keys, so on and so forth. Then it's only a 4-year waiting period. So it's important for people to understand that as well.
4 years versus 7 years. And you know that because it's recorded in the credit bureau that way? Is that how that works?
Typically, it will be on the credit report on sometimes it'll just say foreclosure, but we can certainly find that out from our end if it was a deed in lieu of foreclosure just by getting a verification from the lender.
Okay. So bottom line is that if you get in over your head and you're having a hard time, that you need to go work with your lender and your servicer so that you can help participate with them, because it makes things better for you in the end. Now, having worked with many people that did short sales and that ended up getting foreclosed on, a lot of times the emotional journey and the stress of it makes a person just shut down. And what you're saying is that if you shut down and you just cannot participate with it because it's too upsetting for you, it's actually going to dump on you even more, make it even worse for you, right? So if you can participate, yeah, it's not going to be sunshine and roses, but it's going to be better quicker. Is that what you're saying?
Absolutely. And then the FHA, VA loans, they have a shorter waiting period either way. So it's
okay. So that's
3
good
years.
too. Okay. Is there anything else you want to share with people before we finish today?
Yes, there is one last thing. Because we spoke about different lenders handle things different ways, what we really want to make sure of is that you protect yourself as the consumer. And the best way to do that is whatever communication you get from your servicer, that you get it in writing and you keep it. Okay, mistakes happen. You could be talking to somebody that's new that maybe gives you the wrong information, whatever the case may be. And you need that in writing to make them stand behind what you have. So that's very important, that as you call your servicers about how things are going to work, reporting to the credit bureaus, when do my payments start, put them on the end, make them all at once, divide them out, whatever you're planning on doing, you get that in writing from the servicer. Okay, and then hang on to it.
So what you're saying is that after I talk to the person on the phone and I say, okay, this is what our plan is, I say, are you going to confirm this with me in writing? Are you sending me a letter? Or are you sending me an email? Is that
Exactly. And either way would work as long as their email has a signature on it. They're representing the company. So, and then you save it, you keep it, and and then if anything goes sideways on down the road, then you have something to fall back on, because that as many credit reports as I get to see, a lot of things happen and people think they have it solved and the company just doesn't follow through. So they need to get it in writing. So
okay? And then if you end up getting an email that's just signed, Internet Call Center Department, it would be a smart to have, when you talk to that person on the phone, that you write down date and time and their name and their callback phone number, because then, God forbid, you had to get an attorney, they would be able to track that down and show that that did happen. And a lot of those calls are recorded, so they would be able to get in there and hear that too. I mean, if things really got sticky. So definitely take all the notes that you can, get a folder for it, put everything in that folder or a folder on your email so that you have everything handy. I will tell you, Mike, that's excellent, excellent advice, because there's been many times over my real estate business that one sheet of paper solves everything. So document, document, document when you're doing something with your mortgage lender. That's great advice. So if you have any more questions about forbearance or what you're going to do or how you're going to do it, the best thing to do, if you want to stay in your house, then you need to call your servicer and get it worked out. Make sure that you're perfectly clear on what they're talking about and what's going to be happening. If you need to move in the midst of this, please give us a call. We'll go over your specific criteria and what specifically happened in your life. We'll get together with Mike and we'll make a plan of success to get you where you want to go. And now some of that might include renting for a little bit. It might include downsizing. It could be a myriad of different things. I mean, really, when we go meet with anyone in their kitchen, we go in and we have to talk with them about where they want to go and what's been going on with their life to really formulate the best plan of attack for them. Everybody's process is different according to where they want to go and what's been going on in their life. So far this year, we've sold 240 some odd houses, and we never see the same thing twice. Everybody's life is a little bit different. So the big key is to get some expertise and to reach out to the right people. Okay, well, thank you so much, Mike. I really appreciate your time. You're awesome. And have a wonderful day.
Thanks for having me. We'll see you later.